Welcome to Alpha Insights. I'm Joe. Today we're talking cannabis policy and what it means for investors. And with me is Kate, our fixed income specialist who's been watching the policy flow and investor reaction closely. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Joe. Great to be here.
So Kate, headlines out of a few states are getting people moving in the market. Give us the big picture. What changed and why traders care?
In short, state-level moves are speeding up patient access in a couple of places, and one governor publicly pushed back on a more restrictive legal posture. That matters because when states widen access, whether by adding products or allowing use in hospitals, you get a clearer, larger addressable market for licensed suppliers. Investors price that in quickly, especially into the ETFs and the bigger operators who can serve multiple states.
Let's take those state stories one at a time. Kentucky put gummies on dispensary shelves and the governor is asking for more qualifying conditions. That sounds small, but meaningful.
Exactly. Gummies are a product form that appeals to a wider swath of patients, and adding serious conditions like ALS as qualifying illnesses can materially expand the patient base. Practically, that means more SKUs in stores, different inventory turns, and potentially quicker revenue growth for suppliers licensed in Kentucky. For investors, the things to watch are actual retail rollout metrics: sales per dispensary, which products are selling, and how quickly new dispensaries get licensed. You can start seeing sales effects within weeks of a rollout, but meaningful revenue impact usually shows up over a quarter or more once distribution scales.
Okay, so gummies are a demand play and the timeline is not instant, but not glacial either. Mississippi also had a development about hospitals.
Right. The State House moved to allow terminally ill patients to use medical cannabis inside hospitals, nursing facilities, and hospice centers. That's a different kind of expansion. It creates an institutional, point-of-care channel. Those are appealing to producers because institutional channels tend to be steadier than walk-in retail. If that law passes and gets implemented, it could lead to partnerships between producers and care facilities and a more predictable revenue stream over time.
And then there was that political twist in Colorado, the governor disagreeing with the attorney general over a filing tied to gun ownership and cannabis use. How should investors read that?
It's important because it highlights state-level political friction. The attorney general supported a federal filing that would tighten gun ownership rules for people who use cannabis. The governor pushed back. While one governor can't change federal law, that kind of executive pushback reduces the chance that states will all line up behind the strictest interpretations. For companies and patients, it lowers the risk of a coordinated set of state-level restrictions. Investors should watch further legal filings and public statements. They'll signal whether enforcement risk is easing or becoming more uncertain.
Markets reacted today more to policy than to company earnings, right? What moved and why?
Yes. Flows concentrated into the big sector ETF that tracks U.S. cannabis companies and into a handful of multi-state operators and international players. That's typical. When policy headlines land, ETFs act as a one-stop shop for traders to express a sector view. Some individual stocks that are more exposed to newly active states or to cross-border markets also saw volume. The takeaway is that policy is the immediate driver of sentiment and positioning, while fundamentals follow once sales data and earnings start reflecting the changes.
So for someone who already has cannabis exposure, what should they be doing now?
Reassess. Don't panic. Look at your holdings and ask, do these companies have actual market access in the states that are expanding? Can they scale product into new dispensaries quickly? If the answer is yes, they're better positioned. If it's no, the policy win might not translate into revenue for them. Be selective. Regulatory wins create opportunity, but execution determines winners. Also watch upcoming committee hearings, votes, and any federal court action. Those are the events that will move risk and compliance costs.
Any specific metrics investors should track to separate the noise from the signal?
Absolutely. First, retail rollout numbers, sales per dispensary and product mix, especially for edibles like gummies. Second, licensing cadence, how many new dispensaries are approved and how fast they open. Third, any references in upcoming earnings calls to incremental demand from new state programs or institutional channels. And fourth, legal filings and state-level guidance on enforcement, because that affects compliance and potential cost.
Quick practical question. How soon could these state changes actually show up in company revenue?
You can start seeing retail sales within weeks of product hitting shelves, But for companies to report meaningful revenue changes, you're usually looking at a quarter or more once distribution and inventory normalize. Institutional channels, like hospitals, may take longer because of contracting and implementation timelines.
Nice. Before we wrap, what's the short list of risks to keep an eye on?
Follow bill timelines in the states I mentioned. Watch any federal court decisions tying cannabis to other legal areas like gun law. Monitor retail sales data for real demand confirmation. And pay attention to earnings commentary from multi-state operators about new state access. Those are the main things that will change valuations more than headlines alone.
Great. Let's end with 2 or 3 quick takeaways for listeners.
Sure. 1. State policy wins, like broader product access in Kentucky and hospital access in Mississippi, are real demand drivers, but they usually take at least a quarter to show up materially in revenues. 2. Political pushback at the state level, like in Colorado, can reduce the odds of coordinated restrictive enforcement, which lowers regulatory risk for operators. 3. Be selective. Focus on companies with clear state access and execution ability, and watch retail sales and licensing flow rather than headlines alone.
Thanks, Kate. That was really useful. And listeners, if you have questions about anything we talked about today, you can ask us directly at stockalpha.ai. We answer listener questions live, and for more market insights, head over to stockalpha.ai.